Good afternoon, everyone. This is Sam Agresti with Brady Ware. I'm a director and shareholder with the firm, and today I'm kind of representing both groups, the Business Solutions Group and the Dealership Advisors Group. So I'm looking forward to spending a few minutes with you this afternoon, talking about the Coronavirus Aid Economic Security Act, also known as the CARES Act, as you've probably seen in much of the media. First of all, I want to I hope everyone's staying safe and healthy out there before we get started. So I did want to say that. So I got to spend, this is an act that came together fairly quickly given the situation the country's in. It got signed into law Friday night with President Trump signing into law. Came together fairly quickly. There's a lot of guidance, it's 880 pages long. I got to sift through it over the weekend. There's a lot of guidance yet to be come out on this stuff. So no one knows all the answers here. There's a lot of framework and conceptual stuff in this bill that deals both with tax, finance, and labor issues. So what I'm going to do today is kind of cover some of the high points that I think affects privately owned businesses and small businesses, and also some of the related individual provisions. So that's kind of where I want to start at. I have the agenda we're going to start with is this Paycheck Protection Program. Then we're going to move to some of these emergency EIDL grants, some changes in unemployment insurance provisions, and also some things that affect individual provisions and also business provisions. But we're going to spend probably a little deeper dive in the Paycheck Protection Program. This one is probably where the heart of where it's going to be the game changer for most people on this webinar. Has the most effect, kind of the most positive effect for you. So with that, let's jump into the Paycheck Protection Program. This is a program put out through the SBA. Is going to be administering it. It's it's coming through as a special program. The SBA, unlike a lot of people hear SBA, they think, oh, the SBA, a lot of documentation, a lot of fees, etc. Now this is going to be a very streamlined program, and it's operated. The SBA is going to operate it through banks, and they're the ones going to be administering it. Versus most of you knew the phase 2 relief, the disaster loans, which was directly administered through the SBA, and there was a ton of issues getting them in there, and it took forever. Fortunately, this bill is $349 billion has been allocated for this program, and it's going to be done through SBA approved banks. So that's how this is going to be going. So a little bit of overview, then we'll get into some more details. Just give you an overview of this loan program. In essence, this is a forgivable government loan for small business. In other words, if you follow the rules, which are primarily designed for small business to pay their employees during the COVID-19 crisis, the loan should be forgiven. Majority of the loan, if not all of it, will be forgiven. All the loan terms will be the same. So there's not individual loan terms as with other SBA programs. Where this is all cookie cutter kind of stuff. The loan proceeds are going to be forgiven again, I mentioned it's a forgivable government loan. Along with loan proceeds are used to cover payroll costs, mortgage interest, rent, utility costs, and also in there is also interest on other debt obligations over the covered 8-week period after the loan is made. And that's where you're going to see a lot of language where they say covered period. And that's where it's going to start, that 8-week period after the loan is made. Also, employee and compensation levels are going to be maintained during this 8-week period, and we'll get into more of that. There's some nuances there as well. We'll get into in a moment. One thing is payroll costs are capped at $100,000 on an annualized basis for each employee. So just keep that in mind. And the excess over 100,000 is not going to be counted towards in this program. So and coming off the SBA is expecting about 25% of the forgiven amount to be related to non-payroll costs. So they're kind of expecting that. Some other provisions in there, the loan payments will be deferred for 6 months. So the next thing we want to jump into, when can I apply? Well, yesterday afternoon, March 31st, Tuesday afternoon, they finally released a very abbreviated loan application. Most people, if you ever done SBA, had the 1919 form, and it's eight or 9 pages. This one's essentially a 2-page form. So now there's going to be supporting documentation that's going to be coming behind this form, which we'll get into in a moment as well. But when can I apply? This program is going to go live on April 3rd for most small businesses, sole proprietorships. They're going to be able to apply this coming Friday. So you want to, if you're going to be involved in this program, interested in pursuing this program, you need to be doing your homework now and start pulling some of the data that they're going to need, so you're ready to go submit this application on Friday. April 10th is going to be a week from this Friday. It's going to be is for the independent contractors and self-employed individuals who can apply through this, who's covered by this loan program as well. And regulate again. This is going to be done. This will be done through the banking system and SBA approved banks. So you want to be out there right now talking to your bank. If you don't have a bank, I'd open up, get a relationship, a checking account set up. But if you do have a bank, I would reach out to your relationship bank manager and let them know that this is something you're going to be pursuing, so they have a heads up that this is coming. You're on their list. You're on their radar screen. Because I think demand is going to be very high for this. We've had an unbelievable amount of inquiries at our firm on this, and putting spreadsheets together and some templates over the last few days. So I anticipate demand to be very, very high for this. Again, if you don't have a bank, there's also the SBA has a site on their website of some SBA lenders. You might want to check that out. If not, feel free to reach out to our firm. We'll have our contact information at the end of this presentation. We do work with some non-bank SBA providers as well, which we could assist you with. So, but again, you're going to be applying through any SBA approved bank, and that's what you want to ask your bank too, especially some of the smaller community banks. Make sure they are SBA approved banks. They're going to elevate the status to everyone. I believe what I read earlier this week, they're elevating the status from express lenders to all preferred lenders as for this program only. So, but do have that conversation with your bank. Let's get into who's eligible for this loan. It's all businesses, including not-for-profits, veteran organizations, tribal businesses, sole proprietorships, self-employed individuals, and independent contractors with 500 or fewer employees can apply. And what you're looking at there is a 12-week average pay periods prior to applying. So that's what you're going to look at. There's some SBA guidance on their website to get more into the calculations, and they're going to look at specific tax forms and payroll reports to support this documentation of this. However, there's certain industries that have more than 500 employees, and there's those are in that NIC code 72. Basically in the food and hospitality. And I would encourage you, if you're in that area, to look and see if you have a 72 starting with the NIC code, you may fall into this exception. And what this exception is it allows you to take the 500 to a physical location test versus an aggregate overall company. In other words, each location's under 500 employees. So that's something that will carve out for the food and hospitality industries. And also in that carve out, also there are franchises, SBA's franchise directory as well. There's besides the hotel and food service industries. So kind of keep a lookout for there if you fall into that category, because you still may be eligible for this loan if that's the case. A lot of things is what do I need to apply? There's an application, like I said, that came out yesterday afternoon. It's a 2-page application. That's your starting point. And then you're going to want to start going back through the documentation that they're going to need to document this loan. Most of the stuff, most of the things it's driven off payroll cost. So you're going to need things you're going to need to provide your lender when you apply for this loan, either this Friday or the Friday after. And those are some of the sources. We're going to get into a moment what constitutes payroll cost, because payroll cost is what determines the amount of the loan. So we're going to get that in a second. You're going to also need to you know, technically, one of the requirements is you only have one loan under this program, so you're not going to have multiple PPP program loans. This it's one and done. Quite frankly, I'd be surprised if this money doesn't run out fairly quickly. Again, the demand we're seeing right now is of interest is pretty high. And technically the program's open to June 30th, 2020. But you know, that remains to be seen if Congress has a phase 4 and they refund this program with some more money if it runs out. I do not see this $349 billion lasting to June 30th, 2020. A lot of questions we get is what can I use, what uses can I use this money for? And it's basically used for payroll costs, and that includes benefits. It's also used for, it can be used for interest on mortgage obligations incurred before February 15th, 2020, rent under lease agreements enforced before February 15th, 2020, and utilities which service began before February 15th, 2020. Also, into the bill also has interest on debt obligations as well, those incurred before February 15th, 2020. So those are what they call covered expenses, and that's what the loan proceeds could be used for. Let's jump into a second. What constitutes payroll costs? Because it's not just wages. Obviously, salaries, wages, commissions, and tips are the premise, but it also is the first component, and that's capped at $100,000 per employee on an annualized basis. So, if somebody's making $250,000 on W-2 wages, you're going to be able to count $100,000 as towards your payroll cost. So then you also include in that payroll cost is employee benefits, including vacation, sick leave, allowance, dismissal payments, group health care benefits. Those sort of things are included into the calculation for payroll cost. Also included in there are state and local taxes assessed on compensation, depending on what state you're in. That may vary. For sole practitioners, independent contractors, wages, commissions on net earnings from self-employment are capped at $100,000 annualized basis. So this is for your 1099 subcontractors, and those folks, you're going to be capped at $100,000 for this. Another component that we get we've got a lot of questions on what's the size this loan could be. Well, this loan is going to be capped at $10 million cap in aggregate. And it's going to be, like I said earlier, the payroll cost to use to calculate is going to be at $100,000 per employee, but it's based on 2.5 times your average monthly payroll cost from last year. And you're basically going to take this and use the last 12 months average to calculate your average payroll cost. So that's going to be the size of the loan. That's the first thing that you're going to want to be calculating is determine your average monthly payroll cost based on the average last average monthly for the last 12 months, and it's going to be 2.5 times that amount, and that's going to be your loan cost. Again, it's going to be capped at $10 million in aggregate is the total amount the loan could be. Another topic, as I said earlier, this is based in essence a forgivable government loan. So there's going to be a period of time where you're going to have to apply through the lender for forgiveness. And basically, and what's going to really drive a lot of that is that 8-week period I talked about after the loan is funded and it begins, and how you spent that money is going to be one of the components that's going to drive the how much of that loan is going to be forgiven. You also, the one component also is, what we're telling a lot of people to do, since this is going to be an application process for forgiveness, is make sure you have a good audit trail and you can segregate funds. We recommend some people, and we know some people open up a separate checking account so they could track the activity of this amount, and when it gets deposited in there, and you have good accounting and audit trail for it. So the other component's going to drive your forgiveness is maintaining staff and compensation levels. So your loan forgiveness will be reduced if you decrease your full-time headcount. Your loan forgiveness, if it's also if you level the comp, and I say compensation, if you decrease the salaries and wages by more than 25% for any one employee than they made in the prior period, that will be held against, that will become a deduction as well. So there's things you need to be considered, things to consider on that as well. The rehire, they do have a rehiring provision. You have until June 30th, 2020 to restore your full-time employment salary levels if you made workforce changes between February 15th, 2020 and April 26th, 2020. So you do have till June 30th to restore that head count. There are some, the periods they're going to be looking at for this forgiveness is they're going to give you three, essentially two, but potentially three if you count seasonal option. It's going to be the average number of FTEs per month from February 15th, 2019 to June 30th, 2019. And the other one's going to be compared against your average FTEs per month from January 1st, 2020 to February 29th, 2020. Whatever one works better. There's also a seasonal provision in there, which allows the employer to take the average number of FTEs per month from February 15th, 2019 to June 30th, 2019. So those are things, those are going to be very components they're going to be comparing to when looking at the average number of full-time equivalents per month for the 8-week period beginning after loan origination. So, so that's going to be something that to keep in mind. Also on that payroll cost, there's some nuances in there for S corporation shareholders with regard to health insurance you need to be aware of. It's counted as compensation. There's some little nuances in there to keep in mind when you're putting that loan cost or the payroll costs together. So to figure out the loan amount. Again, you're going to be submitting a loan request to the institution servicing the loan. The lender will make a decision within 60 days of submission regarding the forgiveness. Jumping ahead a little bit, the interest rate on this loan is 0.50%, is fixed rate. There's going to be deferment of 6 months, all payments deferred for 6 months, but interest is going to accrue during that period, so be aware of that. The loan is due in 2 years, but there are no prepayment penalties. So what we're telling clients is, hey, if you don't get it all forgiven for some reason, and you're stuck with an amount, you don't need it, you have cash reserves, the economy's back, you have no prepayment penalty, so you can just pay it back. There's no pledge collateral or loans for this, which is very different from many SBA programs. There's no collateral required for this loan. Also, there's no personal guarantee for this loan. So it's essentially no guarantees on this loan as well, which is very favorable. Based on the application that came out as late as yesterday afternoon, some things you're going to be certifying. Let's kind of cover that real quick because this will make sure everyone's aware of some of the certifications they're going to ask you to make on this application. They're going to make sure that they're going to want to know that the economic concern that makes this loan necessary to support your ongoing operations. Now, this is a low hurdle given most states operate under shelter and stay or a lockdown by the government. So this one may not be a hard hurdle to overcome. The funds will be used to retain workers, maintain payroll, like we talked about the usages, the mortgage, the lease, utility payments, interest on debt obligations. You're going to certify you don't have another loan under this program. You're going to provide documentation that verifies the FTEs, full-time equivalent employees you have on payroll, and the dollar amounts associated. Also, the covered rents, and support for the utilities and the expenses that you pay with this on the 8 weeks subsequent to loan origination. And that's going to come down more to where you're going to certify after the 8-week period, you're applying for loan forgiveness. I think the way this thing's structured, they're kind of anticipating that that more than 25%, not more than 25% of the forgiven amount will be for non-payroll costs. I mean, that's kind of something. So the thing's really designed to maintain your workforce during this period of time. All information, all the information you provide in application supporting documentation is going to be true and accurate. They're going to make you sign some pretty hefty language in there. So this thing will be so underwriting of the thing is so streamlined. These loans are 100% guaranteed by the government, so the bank has no risk as long as they follow the standard operating procedure, which we're expecting out late this afternoon. We're hearing it's going to be about 200-page standard operating procedure the SBA is going to drop on us here shortly. So, and basically, these banks, like, again, if the bank follows the process and documentation, they're going to be 100% guaranteed for these loans by the federal government. So, and they're going to acknowledge that at the end of the day, the institute, the lender is going to calculate the eligible loan amount using the tax documents. You're going to be affirming that these are the actual tax documents that are real and have been filed with IRS and things, because there will be no time for them to track down IRS transcripts for these loans. These loans are intended to be funded fairly quickly. So that's kind of the essence of the payroll protection program. I think you don't see this could be a good opportunity for businesses that are struggling just during this time, and provide cash needed to keep folks employed and cover payroll and some other fixed expenses. So it's really designed, like I said, if you follow the rules, it's designed to be forgiven. I'm going to move on to some other stuff. The emergency EIDL grants are out there. These grants kind of came effective for periods January 31st, 2020, and they go through December 31st, 2020. And they do, and it's for businesses 500 and less. Again, that seems to be the watermark. That's the definition in the SBA for years. But it's used pretty much for it's basically used for it's pretty broad usage on it. So you're allowed to use it to provide sick pay, pay expenses related to COVID-19, increased costs, supply chain disruptions, mortgage payments. It's basically designed to be a grant. Again, this will be netted. This grant is subtracted from any of the forgiveness you're going to have under other loan programs, such as the Payment Protection Program. So there'll be a netting effect of this. Also, that comes up, one last point on I just thought of on that also, the disaster loans that people were applying for last week, those can be refinanced through this Payroll Protection Program loan as well. And because you remember that disaster loans that do not have forgiveness provisions in there. And these grants are limited to $10,000. So they're not a lot. They're meant to be. They really were designed to help people in payroll crunch, to make payroll and stuff with crunches due to government shutdowns related to COVID-19. One of the things that I'm going to jump to, one thing we're going to move on to is unemployment insurance provisions. Those got increased in the CARE Act. One is, it's called the Pandemic Unemployment Assistance, and which basically what this did was provide temporary unemployment assistance to those individuals not traditionally eligible for unemployment benefits, such as self-employed independent contractors, and basically allowed them to be eligible. Again, a lot of these programs are funded through federal funds ran by. So basically, eligibility is very broad on this. And the benefit is based upon the amount the person would receive otherwise under state law plus $600. So it's going to be increased, and typically it's going to be increased. So it's going to have the same increased benefit as the traditional employee. The second part of that unemployment insurance provision is the emergency increase in unemployment and compensation benefits. And again, this is basically taking the state ran unemployment program that's traditionally funded through federal funds and increasing it to $600. We've had some questions to us, is this going to be taxable to the individual? At least in Ohio right now, there has been no waiver of unemployment benefits not being taxable. And we believe that this increase to $600 will start after the date of enactment of this law, which was last Friday. So that's when it will start. Also to note, under the unemployment compensation benefits, they did also waive the 1 week waiting period was waived as well. So this is a decision many business owners are going to wrestle with, because sometimes, you know, people going on unemployment will could earn more money probably than staying employed and relieving some of the cash flow of some of the businesses while they're shut down or sales are drastically dropped. So it's just a couple of notes. Again, there's more state by state. These are unemployment's typically ran by state. So depending on what state you are in, you could it could have applicability to it. Next, I want to jump to individuals. Just want to highlight a few. I also want to highlight a few things. Again, I'm going to do some flyovers on this stuff. If these topics are apply to you, you definitely want to do a deeper dive or reach out to us, or if we're not your accounting firm, your tax preparer or accounting firm, because they might have more. You might want to do a deeper dive on this stuff. The first thing that affected individuals, most people saw in the news, was the recovery rebates. And what this was basically providing $1,200 for single taxpayers does not exceed whose income doesn't exceed $75,000, and $2,400 for married filing jointly, whose income does not exceed $150,000, and $500 for each child. And these are ones that were these are based on 2018 tax filings, and if you filed electronically and had your deposits electronically, these are the funds you heard about would go right directly into your bank account. If you did file paper return, have paper checks, that's kind of how you're going to receive this money. But basically, you're going to get relief checks up to $1,200 and $2,400 to provide immediate relief to people, but not counting if you have dependent children. So that's the recovery rebates. Hopefully this helps out a lot of folks, especially those hurt by the restaurant, the hospitality and restaurant industries that are completely shut down. So also under individual provisions is retirement funds. The Act waives the 10% additional tax on early distributions. It's distributions up to $100,000. It's related to coronavirus related. So that distribution is still taxable. The 10% penalty is waived, but the tax on it could be repaid over a 3-year period. So that's some relief it provides for people that are in financial jams. It also waived the required minimum distributions for folks who's required to take required minimum distributions out of their retirement, their qualified plans. It did waive it for the calendar year of 2020. Another provision that affects several individuals, charitable contributions. If you remember, there's a 50% of adjusted gross income limitation. That's been suspended for 2020, and also the 10% taxable income limitation for corporations is now the 25%. So that is contained in this act, and also the act provide a $300 above the line deduction for a taxpayer who does not elect itemized deductions. So that will also be in effect for 2020. There's also a provision in there for employer payments of student loans. This act provides an income exclusion capped at $5,250 for individuals receiving student loan assistance from their employers. So those are about 5 things that 5 provisions I think that could be really relevant to a lot of people. If any of those apply, you definitely want to do a deeper dive. Again, like I said earlier in this presentation, this law was to run together at record speed. There's a lot of regulations, a lot of guidance expected to be coming out in the forthcoming weeks. So this 880-page CARE Act isn't even a week old yet. So there's a lot of guidance yet to come with this stuff. So lastly, I want to spend the last few minutes on a couple of business provisions out there that I think that could be relevant to a lot of the small privately owned companies. The biggest one, and one that we've done some wrestling with and analysis with, is this employer retention credit for employers subject to closure due to COVID-19. And what this basically provides is a refundable tax credit equal to 50% of qualified wages, capped at $10,000 per employee, including health benefits for all quarters. And for employers who are carrying on a trade or business in 2020's operations were either partially or fully suspended due to orders from government authorities due to COVID-19, or whose gross receipts for that calendar quarter of 2020 is less than 50% of the gross receipts for the same quarter in 2019. This credit is available for wages paid or incurred from March 13th, 2020 through December 31st, 2021. However, just to know, this is something we've been wrestling with. Employers taking the SBA small business interruption loans are not eligible for this credit. So you really got to look at your options. We've wrestled with this last few days. I will tell you, I think there's very few situations where I would pass up on the payroll protection loan and go for the tax credit. However, there are situations, so you do need to take a look at it. But I think when you look at gross receipts less than 50% for the same calendar quarter in 2019, you've got to really ask yourself, okay, if the economy gets turned back on, how long is it going to take for me to get back to normal levels? So I can see that's what you got to look at, because once you don't have a government shutdown order or your receipts are above 50%, this credit doesn't continue. Again, like I said, it's for wages March 15th, 2020 through December 31st, 2021. So there's a long range there, but you got to meet those requirements. So it's something, we've kind of modeled some of it out, on certain situations, and almost all the times it worked out taking the payroll protection program loan. So another tax provision out there is delay of payment for employer payroll taxes. The Act allows employers to defer payments of employment taxes, with 50% of the deferral being due in December 31st, 2021, and other remaining in December 31st, 2022. This deferral, again, is not available to people who take the SBA loans. So, and this is really what we're talking about here is a 6.2% FICA portion. So it's something, especially if you're not taking the loan or you got employees over 500, this could be a significant amount of money to be saved. Again, it's not deferred. It's deferred, not forgiven. So that's why, again, when you're looking at that PPP program I keep talking about, I think that's the biggest thing in this whole act for small business. Net operating losses is another one. They went back and allowed the 5-year carryback for net operating losses arising for tax years beginning after December 31st, 2017 and before January 1st, 2020. There's special rules that apply to REITs, but there is a temporary suspension at 80% taxable income limitation for losses arising in taxable years beginning before January 1st, 2021. So if you have net operating losses, this might be an opportunity for you to do a deeper dive in and look into. There's losses out there, losses for non-corporate taxpayers. This act is relaxed rules for non-corporate taxpayers related, basically sole proprietors and partnerships related to excess farm losses and excess business losses. So if you're dealing with a loss situation, this is something you want to look at for deductibility losses. The act, also the alternative minimum tax credits. The act accelerates the refund AMT credits for 2019 instead of originally expected through 2021. It also provides ability for corporate taxpayers to elect and make refundable AMT credits in 2018. So there could be some opportunity there to go back and look at that if you're dealing with alternative minimum tax. The next one here is the business interest limitation. This is probably one that could affect some people. Part of the last tax law, there was a limitation on deductibility of interest. This act takes back to 50% for tax years beginning in 2019 and 2020. So you want to go back and look if you had that limitation, if you weren't able to deduct all your interest back in 2019 and also 2020. So this increased limitation is not applied to partnerships for the year 2019. Instead, partners are allowed to treat 50% of their excess business interest from 2019 as interest in 2020 and not subject. So it's something, if you have that limitation, it's something you definitely want to take a look at. it's IRS. The code is IRC 163J. So if you're dealing with, if you had that may be an opportunity to take advantage of getting your interest to more deductible if you hit that limitation. Lastly, I want to hit is this qualified improvement property. This was a thing that accidentally got deleted from the last tax bill we had. It dealt with basically it did away with 15-year property. It was accidentally deleted. We've been waiting. It needed a law to put it back in the code, believe it or not. Although everyone recognized it was accidentally deleted. But this CARE Act actually puts it back in there and makes qualified improvement property 15 years versus the 39 that we had to live with in 2018. So having make that, the QIP eligible, it also makes it eligible for federal bonus depreciation. So there could be some opportunity. It is retroactive. It did make it retroactive to 1/1/18. So could be opportunity to look at the 2018 tax filings and see if there's some opportunity there. So, with that, I want to wrap it up. I threw a lot in there in the last 30 minutes or so. This bill, again, is 880 pages, has a lot of other things in there that will probably be coming out related to some startup stuff and things like that. But these are the high points, going through that bill that I think affect the majority of folks and business owners. If you have questions, our contact information is on the last slide. Please shoot us an email. We'll try to get you an answer. A lot of answers aren't even out there yet, so like I said, we'll try. But shoot us, if you have any questions, please reach out to us. We'll be looking forward to helping you, and I appreciate your time today. Everyone stay safe and healthy out there, and I'll talk to you soon.